The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 21st, wonderful Wednesday, prior to Thanksgiving. You gotta love it, folks. Opening bell on the Trader's Edge. Thanks so much for joining me. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools. These are the tools that each of us need in order to live an inspired life. And living an inspired life, folks, that is truly what it's all about. So let's go take a look at one of these tools here. I call this tool appreciating everything and everyone. That is the meaning of Thanksgiving out there. You know, in the spirit of Thanksgiving, or if the spirit of Thanksgiving seems to be sagging because of the anxieties of concerns, a variety of worries out there, that really means, you know, watching the television, watching news out there. You don't see a lot of positive stuff out there, a lot of things to be anxious about, let alone starting the early shopping season, not even waiting until tomorrow, but starting that off not even waiting until Friday, but starting that off tomorrow evening or Thanksgiving evening out there. You know, a lot of anxiety. But I suggest that what you do is you try releasing all of those limiting and restricting beliefs out there. And instead, what I want you to do is I want you to move towards an extraordinary outcome. That really is the spirit of Thanksgiving out there. If you want to do something really cool, if you want to really feel good, folks, and you still got time to do this, go buy a Thanksgiving meal for a needy family out there. Go get all the fixings, the turkey and everything. If you want to feel good, that's absolutely an extraordinary way in order to be able to celebrate Thanksgiving. Better than just sitting around and eating the turkey yourself out there. However, and there is no better time than on Thanksgiving Day, folks, for you to begin that journey, or even today or tomorrow out there. Now, I challenge you. Here's what I'm going to do, is I want you to create this extraordinary habit. Now, it just begins here on Thanksgiving, but you can use this each and every day. And what I want you to do is I want you to look at the folks that are sitting around the dinner table with you, and I want you to find one thing, at least one thing, that you can find about those people that are just simply extraordinary talents that they have. Just something that is very private, how about just simply their best feature, whatever that might be out there. And what I want you to do is I want you to go mention something positive. Do it privately. Don't, just sit at the dinner table and say, I like this about you, or what have you, or, I really appreciate this great quality that you have. What I want you to do is just do it privately. Even if it's somebody, maybe it's, a family member or somebody that you don't get along with. No better time than on Thanksgiving to find something that you actually appreciate in everyone that is out there. You can always find a good quality, and that's what I want you to do. What it will do, folks, it will truly improve your every relationship, and what a great way to start each day. In fact, what it may do, because you never know what the other person is thinking, you never know what's going on inside their mind, you never know what they're processing, and what it might do is you might just simply bring courage to those that are facing difficult times. You can't judge a book by its cover out there. And what I want you to do is I want you to find the best in everyone. Give the gift of appreciation. That's really the gift of this holiday season, and give it as generously as you humanly possibly can. Folks, there are so many things that I'm grateful for in my life, but the three most things that I'm most grateful. Number one, simply being alive out there. Two, having a good mind. At least I think I have a good mind. And three, having the wisdom to just simply say thank you. I want to say thank you for you investing your time in me and tuning into this show, all of us here at TFNN, and I certainly want you to have a happy Thanksgiving out there. Let's go take a look at these markets. Let's go see what the bulls and bears are doing. One of the things the bulls are doing, folks, they're consuming all of the bad news that the bears try to throw at them. No better case in point than yesterday, as Ben Bernanke was out there on the stump, but really just communicating nothing more than what he had communicated in the past, everything that everybody knew. But the bears took that as an opportunity to start selling the market off. And they did it within a real quick 30-minute time period. That's that long-range bar. If you're watching us on TigerTV, that's what you're seeing on my screen here. Maybe you're listening on a radio station. Maybe you're listening on your mobile device. You can always catch the archive of this show on Channel 9 out there. What you're going going to see here, I've got this automated tool that's on my charting package that helps me to understand what type of expansions and contractions are taking place in between swing points. Because what things will do, folks, is they'll contract either to 0.382, 618, or 0.786. It's just part of the EKG of the stock market, or they'll expand. Things are always contracting and expanding. Think about it. If you're listening on Thanksgiving, you're expanding right now. There's no question that you probably had maybe just one scoop, one forkful, one spoonful of maybe just a little bit too much out there. So there's going to be some expansion going on Thanksgiving. And then on the following day, well, then you got leftovers. There's a little bit more expansion. By Sunday, things ought to be contracting a bit. I don't think in the markets they'll be contracting, but if we do go take a look at those numbers, expansion numbers are 1.272 and 1.618. Those are your primary numbers that you're taking a look at. If we do take a look at the ES mini here, this is a 30-minute chart. You can see the way the market responded as it moved down. This was at the 1:30 time frame yesterday. Got down to a low of 1374, was making a 1.272 expansion of a swing point. That swing point was the swing point low coming into the 2 o'clock session on November the 19th out there. There's one of your expansions. Let's take a look at a contraction overnight. Overnight, you had the European Union or the finance ministers struggling to get the IMF together to create some kind of package deal for Greece out there. What did the market do? Well, the bears took the opportunity to go ahead and sell that market off. This time, it took about an hour or so. The sell-off really began at about 11 o'clock last night, lasted till the 11:30, maybe midnight session. What you can see the market did was it made a 0.786 retracement of Ben Bernanke's move out there. Couldn't even make a 100% move of a move. If you take a look, I'll blow this up. You're going to see a 0.786 retracement as the market moved into the 4:30 time frame this morning. Pulled back a bit. It's moving higher. What are these markets going to do? It's really simple. You've got two sets of pieces of information that have come out within the last 24 hours. You had the jobs numbers or the unemployment numbers. The claims are down 41,000 down to 410,000. You know that was in line with estimates. Nothing good about 410,000 unemployment claims out there. Still in line, but you've had two pieces of information that should have spooked the markets out there. And what do? Just for a short bit of time, the bears had control for just a short bit of time out there. You now have the market consuming all of the bad news, just like each of us are going to be consuming some turkey out there. And that, folks, I talked on Friday's show, and I was fortunate enough to be able to do Tom's show. We had all kinds of reversal candles out there. Now, that was the market was moving down. There was no good news out there. All that you could do was go take a look at the charts. The chart patterns were telling you had key reversal days and indexes all over the place. Most importantly, quite frankly, you had a hammer candle, one of my hammer candles in Apple, on the daily chart as it was coming down and testing a high volume bar out there. And the way that Apple goes, so goes the markets out here, especially while it is such a heavy weighting inside the NDX out there. But the markets are not going to go higher without the NDX out there. So what does that mean? That really means that the markets are going to likely move higher into next Wednesday. Why next Wednesday? Well, next Wednesday, you've got a full moon, you've got a lunar eclipse combination, you've got the moon at apogee, so you've got all at the same time, not the exact same time, well, all during the exact same day out there within a 24-hour period of time. And what we do know, and we don't know the reason why, we just know that these lunar activities typically act as fuses out there. On Friday, we've got a P-index date, planetary index date, 16 major planetary alignments, all coming, major or minor, all coming in line on Friday. Typically, those are turn days out there. So we'll see what happens on Friday. So we do have that little bit of planetary stuff to get through. I do suspect what we will see is we'll see the markets move up higher. Now, yesterday the market call there, as you listen to the show, as I said, it's just going to close, just a bit higher, just maybe a bit lower out there. It'll have a little bit of a sideways move. And you say, Steve, how did you know that? It was just simply by going and taking a look at the patterns. If we go take a look at the S&P 500 index, I showed you, and which is the most important important set of candle patterns that are out there. This 4-day, this 4-candle pattern, Morning Star. This is the same one that occurred in June 4th. We went back to the Dow yesterday. I have the charts going back to 1929, and we could pick them off one at a time. And this has nothing to do with volume. This is just simply taking a look at candle patterns that are out there, a very powerful candle pattern. You can see here, not just the, if you take a look at the June 4th setup here, which really, you're talking about the big up thrust that took place on June 6th, and then what happened on June 7th. You had a lot of volatility out there, certainly intraday, but at the close of the day, just simply, you know, what looks like a little doji candle, really the same candle it looks like yesterday. However, yesterday, more bullish, quite frankly, than what we saw on June 7th. How do you know that? Well, just simply take a look at that long range, or that long shadow out there. You can see the bulls were more in control on June 7th, or the bears were in control on June 7th. Here, what happened to price? The bears pushed it down. The bulls stepped in, pushed it up. Our markets are moving higher, folks. The S&P headed up into the swing point of November 6th. 1433.38. 877-927-6648. Give us a call. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Things kind of quiet out here in the futures market as we take a look around the world. You've got the DAX up 8 points right now, so nothing big there. The FTSE up 5. Over in Asia last night, everything was green across the board. The Nikkei up another 0.9%, up another 80 points. You had the Shanghai up 22, the Hang Seng up 1.4%, up 296 points out there. King dollar right now back 2 ticks. Gold trading out at 17.26. We're going to go talk about gold here with John in Quincy, Massachusetts. John, thanks for calling. Thanks for holding.
Yeah, thank you. What do you think about the GLD, Steve?
Well, what are you trying to do here? Tell me what your thoughts are. What are you in a trade? Looking to get in a trade? Tell me what you're doing.
Well, I jumped in. I thought that Bernanke would might open the door to some more QE in January or at the December FOMC meeting, but he didn't. So
yeah,
I was looking for a little pop.
Yeah. So I will tell you, gold, when I take a look at, first off, I've got the gold contract, the continuous contract up on my screen. You know, if you're watching us on Tiger TV, gold has me a little bit perplexed here. And that's this. Number one, what I can tell you what it is doing, let's take a look at what the chart says and forget about any kind of fundamental thing we might think is going on. So gold has been consolidated ever since that nice little upthrust that it had on November 6th. And the consolidation range, the low of it, and we're just talking about from November 7th through today. So we're taking a look at the low of that is 1703, and the high of that range is the candle from November 9th, which is 1739. So it's like about a $35 range that gold is consolidating in. Fairly tight out there. The candles themselves would kind of suggest to me here, when I take a look at the, the candles are more towards the upper part of this range. Even the closes on the higher volume or the larger range bars are up towards the top of the range. I expect the market will bounce moving into next Wednesday. So whatever direction gold does break, if gold does break out of this sideways trading range, whatever direction it breaks out in, it will move $35. It should move $35. It should move the same portion of that range there. So to me, I think that gold wants to move up, maybe as high as the 1800. I don't know if it'll make it up there, but it wants to at least travel about $35. If we go take a look at what does that say for the GLD, we take a look at the GLD. On your chart, you could draw the same range out here. You're really looking at the bottom maybe of November 7th, which is the 165 number, and the high is 168 on November 9th. So you're talking about $3. Now, it's trading at 167 right now. If you got in yesterday, it could come back to the bottom of the range, which says that, you'd be probably underwater. So I don't know if it's a good enough reward to risk trade here for you. If yesterday was when you actually hopped into it, you might give it today to see what happens. But it's in this little box range. It doesn't look like it's going to explode to the upside here. Even with the dollar, that should be pulling back to put some fuel in the marketplace out there. So I'm certainly now longer term with regard to gold. I don't like gold right now just simply because the gold's measured in dollars. It looks to me like after we come into the middle of next week, we'll start seeing gold get some more energy in it, and then we should start seeing gold pull back. Because what I'm really looking at here, John, is I'm really looking at the larger term picture. And the larger term picture shows that we've had a triple top test in gold, and that goes all the way back to November 7th, 2011. The highs out there in the 1800 range. Again, it was tested in February or March early part of March, also in that range in the 1790s, 1800, and then again in October. Hasn't been able to break that. So it looks to me like what gold will want to do is it will want to pull all the way back down to the lower part of the range into the 1500 series. So if gold gets up to 1800, I think it's probably a good short. Likewise, if it gets down into the 1500s, it becomes a pretty nice buy out there. So, I don't know what, if you're looking at yesterday's trade as being more long-term, or was it just a, maybe a few-day trade? What were you looking at it for?
Well, I was hoping for a pop. I was just hoping for a hint of more QE and gold was up. So,
with regard to QE3, it certainly hasn't behaved the way that it should. I mean, gold is underneath the price that it was when QE3 was announced out there, and that is not the way that gold behaved for QE1, QE2, or Operation Twist out there. So it says something to us when when it's responding differently. It's giving us, I think, some important information out there. All righty?
Okay.
Happy Thanksgiving. Thanks for listening. 877. You bet. 877-927-6648. We get back, we'll go see how these markets are going to open, what's going to lead us up, and what's going to lead us down. Looks like Salesforce innovation lead this up. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 9 points right now. S&P up 2, Composite up 7 or 6. You got the small caps up 2, Microsoft up 8 ticks, Google down almost $5 here right now, Cisco up 2 pennies, Apple up $4 and change. Lead the charge on the way up here. You've got Salesforce, Corporation Innovation, CRM is the ticker symbol, up $6 and change. That's up about 4.5%. Out with revenues, $788 million versus $584. So doing justice to the top line, not doing too much justice to the bottom line here. I believe their Q3 net loss, $220 million versus $3.76 million from the prior year. They must have also some good forward outlooks in here. That would be different than Scholastic Corp, SCHL. They're down 18, almost 19% here this morning, indicating that they are going to, their revenue is going to be below the estimate out there. So they're the big one taking it to the, on the chin. You've got Apple up next, up about 1% here. Skechers USA, likely the shoe company SKX. They are up a nice 11% here. Looks like just on a upgrade alert. Sarepta Therapeutics up $1.67 here right now. That's starting to move after pulling back and trying to close the gap out there. Cirrus Logic up 5% here this morning, up $1.56. Amazon up $1.32. Flowers Foods FLO up $1.07. Coach COH up 1.5% here, up 87 cents. To the downside, you've got Deere. Deere out with numbers. John Deere. Let's see, what did they post out here? Earnings per share $1.75 versus $1.62. What do they do here revenue-wise? Their net income, well, looks like it should be about, let's see here, net sales 9.79 versus 8.61. So it must be some guidance that they are giving that is pushing the stock down about 3%. You've got Tilly's Inc., TLYS out there. Tilly's Inc. is down 17% here this morning. Let's see if they posted some revenues. $124 million in sales versus $107. Net income $9 million versus $12. So they're struggling out there. St. Jude Medical, STJ, is the ticker symbol. They're off about 5% here. Zale Corporation, this is not a good way to go into the holiday season. The diamond company, Zales, off 20% here this morning. Their Q1 revenues, $357 million versus $350, a net loss of $28 million versus $31 a year ago. So I wonder what their guidance is, but they are taking it on the chin. I wonder if there's a diamond in the rough. We'll go take a look at that stock chart, see what kind of volume it is that we're taking a look at. Before I do that, we had John from Quincy who had called, and I mentioned that gold traveling below the QE3 date. Let me be real specific here. Quantitative easing number 3 by Uncle Ben announced on September 13th in the afternoon, probably about 2:30 or so. We had a wide trading range on gold that day. The low was 1720. The high was 1775. You've got, so I'm using as the benchmark really the high of September 13th out there. You do have gold trading out at 1724, so it's just slightly above the open of the trading session on September the 13th out there. So I just want to make sure that I clarified that. Now let's go take a look at some of these charts. Let's go take a look at some of these losers out here. Let's take a look at Scholastic Corp. see what is happening with them volume-wise. This should be a very light volume day. May not be light volume for Scholastic Corp. SCHL is the ticker symbol. So gapping down, let's go see if it gave us some clues and where this thing is moving down to. So Scholastic Corp did gap up with volume. It did that on the 15th of March. That's some pretty nice volume up to the upside, 2 million shares. However, that area did not hold as support as the equity moved down. In fact, this thing created, holy cow, look at this equity. So the question is, I'm going to refresh my screen, make sure that I have this, because you don't see this really too often out here. So let's take a look at this. Anybody out there have an idea what I'm talking about when I say you don't see this too often? If you're watching on Tiger TV, just for a brief moment, look at the chart. See if there's anything out here that you can identify that would give you a sign that this stock could be toast. French toast out here, or all kinds of toast. I don't know if they teach French at Scholastic Corp, but one of the things that they created here was a major island reversal. Look at this thing, folks. This thing gaps up on March the 14th. So March the 14th, the actual high of the equity during that trading session, 32.58. Gaps up the following session. Low of that session is 35.40. Now, between March 15th and April 24th, this thing built a survivor island. I mean, you're talking about, I don't know how many trading sessions that is. Looks like maybe 15 or more trading sessions that you have out there. What does it do? So on the close of April 24th, the low is 33.18. Gaps down. The high of that day on April 25th is 32.49. Creates one heck of an island reversal formation. Typically you see a 1 day, maybe a 2 or 3 day island reversal candle formation. This one is one of those ones for the textbook out here. And if we take a look at this, I'm going to have to circle this. I'm going to have to make sure I do come back to this. But here is your island out here, which is major. Now, what this equity did do, it tried to get back up here, which it did during the September 21st level, but certainly gave you an indication here. This is a very bearish sign out here. What does the equity do? Tries to get back up into the last time that it broke down, which was the April 24th area. Stayed up here, looks like maybe for about 3-4 weeks, probably 3 weeks out here. Now it's giving it up. It's giving you your second signal. This is at 25.69, gapping down so far this morning, 331,000 shares to the downside. But this equity, this does not look good, folks. Let's put this on a weekly basis, see where the high volume bars are on this thing. So this is going to likely break through an area of support out here, which would be the August 27, 2010 level, 22.21. If it breaks through that, folks, what it will do is it'll go all the way down to the lows in March of 09, down in the $9 and change area out there. You had a nice little bearish engulfing candle up here as the first time that you saw a sign of volume off of the top, and that was on March 30th, 2012. So SCHL, I'll have to put it in my next book out there as far as big island reversal signals. Let's go take a look at what else we have moving here. Let's take a look at Tilly's Inc., TLYS, down 17% this morning. TLYS. I don't know if that's associated with the bar down. Let's go see what they actually do. I'm sure that it's not. But TLYS. Let's go see what they do here. TLYS. I believe there was a Tilly's bar down in Fort Worth, Texas, wasn't there? Let's go see what these, let's see, company profile. Tilly's operates a chain of specialty retail stores featuring casual clothing. So that's what they do. And let's go take a look at this. Well, not a lot of, okay, so this is an IPO, goes back to the, came out on May the 4th. Makes a high out there of $19.29. You know, volume that traded that day, about 586,000 shares. It's well below it. Really not anybody in this equity that's having a lot of fun other than somebody who bought at the open this morning. Got down to a low at 12.50, trading at 12.90 right now. Again, not a lot of volume. To give you an idea, 55,000 shares yesterday, a couple 100,000 shares as the market was moving down on November 15th. So not an equity that I recommend that you pay attention to. Out here, let's go take a look at Salesforce Innovation. They're popping to the upside. CRM is the ticker symbol there. They're the leader in the clubhouse, up $8 and change. That's about 5.55% out there. So let's go see what Salesforce is going to be doing here. It's going to try to take on its swing point highs. It has pretty decent volume so far this morning, with 13 minutes into the trading session already doing 1.2 million shares out here. So this is going to run up to the highs, which will take it into September 14th. That has 3.5 million shares. The low there, 156.56, the high of 161.90 out there. So that is where it is headed. If it gets there today, the low, which is 156.56, it looks like it will. It's going to have the volume. So it's coming into that swing point with volume. That says it should at least go and test the high, which would be the 161.90 level. Let's see here. Where's any sign of weakness out here? Really, it's up above all of the areas of resistance. You had one large day, downdraft day, which would be the May 10th level, the high of that, and that had 9.6 million shares to the downside. The high of that is 149.80. You are up above that now. So it also says that this thing will probably come back and really test the April 19th high. That has 3.1 million shares. So you're looking at 157.80 to 164.75 out there. That is on Salesforce. Let's go take a look at Sarepta Therapeutics, SRPT. Here's a stock that broke out 22 million shares, big volume, and came back and was trying to fill the gap out here. So let's take a look at this here. And I think it still is going to fill the gap. So be careful on these light volume trading days out here. Now, this equity here, look at this thing. On October 3rd, now it only has, actually, it's 27 million shares or trade. There's only 22 million shares that are outstanding in this equity. So October 3rd, gaps up from the evening before. The close the evening before, 17.12. Closes the next day at $45, 44.93. The actual high was $45 even Steven. And what does this thing do? It pulls back, and it pulls back inside the gap. So the top of the gap is 17.12. That is ideally where you would be taking a look at this equity. All that it's doing right now, folks, is it's running into what should be an area here of some resistance because it got below that October 3rd level. Just imagine if you were somebody that bought it somewhere between the open of $31 and the close or the high of $45. How were you feeling when this equity here pulled back to the low of $21.21? Probably not too good out there. So as this thing moves up here, it should start running into a supply line. It's inside this gap out here, and volume-wise here today, 1.1 million shares, I would say. This case here, knowing that we're coming into a light volume weekend out here, means trading session today and the trading session on Friday. The markets are open till 1 o'clock on Friday. I would just be a little careful here. This is on my buy list, but I'm looking for this to come all the way back and close that gap out there. Let's go take a look at Netflix. Netflix up another couple of percent here this morning. NFLX is the ticker symbol. Carl Icahn nosing around inside this equity here. So, of course, nosing around. We don't know if he's pushing anything out here just yet. But Netflix getting all the way back up to the most recent area here of resistance it's going to be running into. Let's draw that line across the screen out here. This is an area where it had broken down. That is coming to the gap down from April the 24th. That high is $90. You probably move that line down just a tad more, and that is what it is running into. So volume-wise, this thing had to the downside. This had 16 million shares to the downside, as well as a sell-off here on July 25th, another 24 million shares to the downside. That pales to a certain extent in comparison to the move up, 15 million shares to the upside on October 31st. I think that was the day that they had announced that Carl Icahn was nosing around inside this equity. So it looks like it's going to try to get back up into about $90 and change. If this thing does get above 90, it could easily then go ahead and fill the gap. That would take it to the April 23rd level, which would be 101.79 out there. It is moving towards a condition here of getting into the overbought territory, so not necessarily a good sign as it runs into an area of supply out there. Let's go see what else do we have here. Skechers. Let's go take a look at Skechers, the shoe company. Let's see what they are doing other than popping up nicely, 15%, I believe, right now, 10% right now, up $1.78. SKX is the ticker symbol. and I think mostly kids' footwear. Maybe they have adult footwear as well. Gapping up here this morning, of course, this is going to run into a supply line as well. That supply line here happens to be the October 2nd high, which is $20.06. Moves down with 2.7 million shares. Today, gapping up so far 338,000 shares. So pretty nice volume with just 18 minutes of trading out there. But this thing is running into, as I say, a supply line. What else do we have on this thing here? Looks like really, here's an equity. Did not pull all the way back down. So here's one that did not complete the gap. The breakout on this was on April the 26th. This equity moves up with 3.7 million shares. You can see the April 25th session, the high there, 1498. I'll use my line tool here. We'll draw it across the bottom. What you will see is this did not pull back and close that gap. It will at some point in time. It didn't. The problem with these, when they get into that center of the gap area, what you'd really prefer to see, folks, you see this little gap up here this day, which would be the April 26th level. That's where you really want to see it come back and test that area and hold. Then what that says is you've got a real strong window out there, a real strong gap, and it can move higher. It eventually will come back and fill that, assuming that you haven't had some kind of total change in what the company does out there. 877-927-6648. Markets continuing their advance through next Wednesday. Dow's up 31, S&P's up 2. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. The Dow up 31 points right now. S&P up about 2. Composite up 5. You've got Apple only up 44 cents here right now. Still digesting some of its gains from a couple trading sessions ago. It was not Tilly's bar. It was Gilly's bar down in Fort Worth, Texas. But there was another famous bar down there as well. I just can't remember the name of it out there. Used to have a Heads on Bodies location out there, but I believe at Gillies you could ride the mechanical bull. Well, the market's going to be riding the mechanical bull here for the next couple of days. Today's trading session, Friday. Of course, Friday we do have a 16p index date, but on into Wednesday of next week. Let's go take a look at Apple, see what Apple is doing out here, up, as I said, about 59 cents. Let me find that chart here on the screen. It should pop out pretty quickly. Here we go in the upper right-hand corner. So Apple now has not made its dead cat bounce, which it will. That'll take it up to 581. We could see Apple go ahead and move up into the $628 level. Really would be no problem. That's nothing more than a sweet 618 retracement of that large move down. That moved down from the 700 and change all the way down to the lows of November 16th out at the 505 level. Of course, it made one of Stevie's hammer candles, that hammer candle, coming into this high volume bar here from February the 15th out there. If Apple follows suit with Microsoft, as Microsoft did in December of 1999 when it made its highs, Apple will also make a .786 retracement before it finally totally gives it up. That, folks, if it does follow suit, the .786 retracement on Apple would take you into the $680 range out there. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How are you today?
Yeah, fine. You?
I am doing great. You want to take a look at the IWM?
Right.
Yeah, tell us how we can help you.
Well, I was thinking of going long.
Okay.
And that's about it.
Okay. Well, the time to really have gone long was certainly on Friday when you got the signal the first time that the bulls showed up out there. So if we take a look at the small caps, though, if you do want to go long, I can give you at least some guidance here with what you should be paying attention to. Number one, you'd want to make sure that you understand what the average daily range is on the IWM. If we take a look at that, I'll go to my position size calculator, and folks, you can go ahead and test this out. If you go to the homepage at tfnn.com over on the left-hand side, what this will do is this will go ahead and calculate. The system is down, so I can't give that to you right at the moment. Sorry about that. What you want to do is go take a look at the last 10 days, high to low out there, and then just simply divide it by 10 just to understand what the average true range is. What the IWM is likely going to do, it's going to run to the level here where it's going to run into resistance, which is this little downtrend line that began all the way from its highs on September 14th. So the very first thing that it's going to do is get up into the 80-30 area. It may get up towards the 81 and change level, most likely into the area of November the 7th. So the high of 81.37 should give you some information out here. What the Russell does have, what the IWM does have, is a high volume bar with the low of it being 81.52. So that would be your target out here, but your real time to have gone long really was on Friday when we got the reversals out there. That was your better reward to risk trade. But, or maybe the next best setup is just be patient, enjoy Thanksgiving, and wait for the short side, which should come sometime next week out there.
Okay, great.
All right. Hope that helps you. You bet. Have a happy Thanksgiving, Lou, to you and your family, as well as everybody out there, folks. And do remember this. You've got an amazing power within yourself, folks. And that power, it's so strong, it'll build a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and I think put wonderful Thanksgiving meals on your table. Have a great Thanksgiving, folks. Look forward to seeing you on Monday.